Good evening and welcome to our special show, India 2020 with RUCHIR Sharma. The Indian voter has spoken, and for the first time in 30 years, the message is loud and clear. Narendra Modi will be India's first Prime Minister outside the Nehru Gandhi family to lead the nation with a simple majority for his party. What does this mean for India and our economy? We have with us RUCHIR Sharma, Head of Emerging Markets at Morgan Stanley and the author of the best-selling book, Breakout Nations, joining us now in the studio. RUCHIR, thanks very much for joining us.
Yes,
you know, you've been traveling through India with a motley bunch.
Right.
Did you anticipate this kind of a landslide victory for the BJP, for Narendra Modi? And my second question, you know, everyone's been talking about how this is the first time that this election has been fought on the economy, on issues of development and so on and so forth. If that truly were the case, then how do you explain the decimation, for instance, of somebody like Nitish Kumar in Bihar?
Yeah, that's right. So I think, you know, like two things here. One, that as far as in all our travels, especially in places such as Uttar Pradesh, I think it was pretty apparent to us, and we wrote about it, at least I did, that, you know, that there's something pretty extraordinary going out here. But always what happens is that the magnitude, especially like in a multi-party system, ends up being much greater than you think, because it's a first past the post system. But I think in India what we're seeing repeatedly now, and we saw this in state elections as well, decisive mandates, which is that when someone is seen as a victor, the momentum really goes more and more in that party's favor. So consistently we find that the victor sort of wins by bigger and bigger margins. So I think that's what's going on. On the end, obviously the numbers are so big that it's hard to say that anyone called this perfectly.
Did you anticipate the kind of victory that they've seen in Uttar Pradesh, the best ever for the BJP?
That's right. I think that, you know, we were looking for more like about 50 seats or something like that. Now they got 60 or so.
More,
so it's a bit more. But I'd say that the direction of this election was pretty easy to call. Now the magnitude has obviously been much bigger than what people expected, but the direction was pretty easy to call. So this is not a black swan event like 2004, which people were expecting, because there people got the direction wrong.
Right.
Here is just about the magnitude, which is underestimating the magnitude, but the direction, I think most people got this correct.
Yeah, absolutely. I mean, you know, even the worst poll in favor of the BJP said 249 as far as the NDA is concerned. So directionally, the polls were suggesting one thing. I want to ask you this, Richard, because you said, you know, our country finds itself at a crossroads. Growth is slumping, inflation is at double digits. Where do you see India today? You know, the narrative changes so quickly. A couple of months ago, India was being written off, and today, you know, people want more of India. You're talking about the Sensex being at 25,000 year-end targets, and today we breached the 25,000 mark itself. So the narrative is fickle. Where do you see India today?
Listen, you know, let's put this like in perspective, that we tend to look at things very often from a stock market perspective, but really like in a broader perspective, the fact of the matter is that India is really off the global map, because in America, this election has not been covered that much. In fact, the most popular video,
jokes about it as well.
Exactly, like the most popular video on out of America on this election was a spoof as to how unpopular this election is in America, where people are saying, why should we bother about this? It's not even in our part of the hemisphere.
Will they now bother about it, you think?
You know, I think, you know, like that'll take time. So from a stock market perspective, you know, we all think that the foreigners are rushing in and there's a lot of capital coming in, which is true. But let's, you know, keep this in perspective, that portfolio flows are about 1% of GDP, but total capital flows to India are about 4% of GDP, and this number is down from 8 to 9% of GDP in 2007. So total capital flows coming into India are half the level today than they were in 2007, 2008, and India, in terms of its attention span in the Western media or in terms of the Western commentators, has gone off a lot. And
what will it take to change that? I mean, obviously, it's not like a switch that, you know, post this decisive mandate, you can turn the switch on and that kind of money is going to return back into India. But what do you think is going to be imperative now for Narendra Modi to do to inspire that kind of confidence?
Well, clearly economic growth, because, you know, in terms of as far as China is concerned, it's already like a $9 trillion economy, and if its growth rate is going to be a 5 or 7%, China has arrived. China is there to stay. At a $2 trillion economy, which is roughly what our size is, we need to sort of start growing at about 7-8% or so for us to be sort of spoken about in the same breath as the major powers in the world. Because what the world has really sort of said to India is that go fix your own problems, and once you get back to sort of high growth rate.
Fix our problems. I mean, I understand that, you know, as far as the growth picture is concerned, we continue to look extremely dodgy at this point in time. But some of the key concerns, current account deficit, fiscal deficit. We can quibble about the fact whether the numbers have been addressed or not, but at least some of those concerns seem to have been allayed somewhat. There seems to have been some stability that is back as far as the currency market, for instance, is concerned.
Oh, there's no question about that. So in terms of, let's not forget where we were last August. Last August, the talk was that will we have to go back to the IMF? When will we get junk status in terms of credit rating? So, of course, we have fixed that. But I think what we're trying to see here is that where are we in the bigger picture? We got a lot of attention of the world last decade when we were growing at 8 to 9%. And then as that growth sort of slumped this decade, and we had the sort of crisis last year, then like India really sort of disappeared off the map. So now clearly India is beyond the stage of where it's being spoken about as a crisis economy.
Yeah.
Like all these silly acronyms like Fragile 5, etc. have already been shattered, right? Yeah. So in terms of India's sort of broken past that. But the whole point is that are we being spoken about in the same breath as China as yet? Of course not. That despite the stock market flows being strong, from a geostrategic standpoint or even from a total capital flow standpoint, which include bank loans, include FDI, we are still well off the highs of 2007-2008.
So what do you think is going to be the big challenge as far as fixing the economy is concerned? Let me start by asking you about the immediate problems. We'll talk about the 3, 6, 1 year or 5-year roadmap in a bit. But immediately, because the next big trigger as far as the market and the economy is concerned is going to be the credit policy on the 2nd of June, followed by the budget. As far as the credit policy is concerned, do you believe that there is any possibility of Governor Rajan surprising with a rate cut?
No, I mean, I think that, that if he does that, that will really raise questions about his independence. So I think that, in fact, the most important thing, and this is something which I've also written about, is the fact that...
You believe this is the Volcker-Reagan moment for India?
Yeah, like in the fact that the circumstances at least are very similar to what we saw like in America in 1980 when they had stagflation and you got a new central bank governor appointed by a Democrat government, and then you have Reagan, who, from very modest beginnings, a controversial state governor who comes to power and sort of fully backs Volcker in his fight against inflation.
Do you think Narendra Modi will fully back Raghuram Rajan? The buzz so far from the BJP has anything but given comfort that there is going to be that kind of backing. Maybe it's just buzz, and maybe Narendra Modi will stand by Raghuram Rajan just as Reagan did Volcker. But what's your own sense? My sense is that he will, which is the fact that I think that the BJP and Modi really understand that inflation was a very big issue in this election. I mean, here we tend to sort of focus a lot on growth, and the outgoing government and the outgoing finance minister would speak a lot about growth, but really it's inflation which has been the killer as far as the politics is concerned. Because so that's single-minded devotion to addressing the inflation problem, that should continue to be the #1 priority for the government and the Reserve Bank of India. Absolutely. I mean, even from a political dividend standpoint, in the fact that if inflation is really low, they will get a big political dividend out of that, because nothing hurts the poor more than high inflation. So I think that inflation needs to be, and so like on the 2nd of June, my suspicion is that the RBI will stand pat, and it should, given the fact that we're seeing at least some stabilization like in inflation, but it should be no hurry to cut interest rates, and Modi should fully back Rajan and sort of quash any speculation that he's going to be changed, because doing that really is a damaging thing. Now, of course, Modi coming to power is meant to be disruptive change. A lot of people are very happy that an outsider is coming here. But not that kind of disruptive. Exactly. We don't want Rajan going that kind of disruptive change. You want positive disruptive change, and there's a lot of positive disruptive change which can be done in India. There are first generation entrepreneurs who are looking for Modi to come and shake the system up. I mean, one of the problems in India is the fact that you've had crony capitalism, and the fact that 2/3 of the companies in India are family owned, which is the highest number for any emerging market in the world. You want to shake that up a bit. You want to create a more rules-based system where people succeed because of genuine skills and not just family ties. But do you really believe that, the argument that you just made, that we're setting ourselves up for that kind of an environment? Well, I think that in terms of disruptive change, that's the kind of disruptive change that India really needs, because the last decade has been a lot about, even when economic growth was strong, a lot of it was really not very healthy, because the same people were getting rich. If you look at the list of billionaires, the same billionaires were sort of dominating like that list. They were coming from the crony capitalist sectors. Last couple of years, that's begun to change already. Like you're seeing the new billionaires on the list come from the pharmaceutical sectors, come from the technology, manufacturing kind of sectors, and the people going
flowing out are from the crony capitalist sector. So you need much more of that. So I think that there's a lot of hope that Modi's election has generated across the social strata, and among the business people, it's a lot about this disruptive change, that someone's going to come and shake the system up and allow a more level playing field for newcomers.
Okay, let me continue with the conversation that we were having about the Reserve Bank and the imperatives ahead of the government. As far as the currency is concerned, and because of the strong flows that we've actually seen the rupee appreciate. Where do you see the rupee in the short term, and what should the Reserve Bank position really be, or stance be, as far as the currency is concerned, because it's linked very closely to our competitiveness? Yeah,
I don't see the rupee really sort of appreciating much from here, because I feel that that will be a huge policy mistake, and I think the RBI understands that. We have a fairly uncompetitive manufacturing sector. We need a cheap and competitive currency. Every East Asian country which sort of experienced an economic miracle did so with a cheap and competitive currency. So we need that, right? That's the lesson from China, Korea, etc.
What's the level that you believe the government and the Reserve Bank should defend?
I don't think it should allow the rupee to appreciate much from here, really. Because the fact of the matter is our inflation is still sort of much higher than the rest of the world, so we're losing competitiveness by the day because of that. So we need the exchange rate to remain stable, but to be stable with possibly like a depreciating bias, not an appreciating bias. I think that's very critical for India. So in terms of that, we should not allow the rupee to appreciate too much from here at all.
So what kind of measures would you like to see if indeed the fund flow is fairly large? Do you believe that we will probably see the government and the Reserve Bank go back on some of the measures, for instance the gold import and so on and so forth, because that's then linked to what happens as far as the current account deficit is concerned? So how do you see all of this panning out as far as the money markets are concerned?
Yeah, I think some of those artificial controls need to go, but as I said, I think the fear of the rupee appreciating too much is a bit exaggerated. Exactly, because as I mentioned to you, that we tend to focus too much on stock market flows, which are 1% of GDP, but total capital flows as a share of GDP are about 4% of GDP, and many of those components are down significantly, whether it's sort of interbank loans, even some FDI components, they're down significantly from what was the case 5-7 years ago. So let's not get too carried away by just the stock market where where there's a lot of foreign portfolio flows, because beyond that, the capital flows into India aren't that robust.
Okay, let me ask you about the next big trigger as far as the economy is concerned, and that is the budget. And that, in a sense, is going to be the first litmus test as far as the economic leaning of this new government is going to be. What do you anticipate? What are the levers that he can pull as far as revving up the engines of growth are concerned, especially if you believe that interest rates should stay where they are?
Yeah, I think that, I mean, like in terms of, there's so much that he can do, right? Which is in terms of, if he decides to touch labor laws, he decides to touch...
You really believe labor laws are going to be touched in the first budget?
Well, you know something? This is his, he has the maximum political capital now.
That he does.
So in terms of, whatever needs to be done in the first 12 to 18 months.
Because that's the honeymoon period.
That's the honeymoon period, and then the political capital really begins to go out. Now, this can be done in many ways. And one way that he can do these changes is to really pass on these decisions to the states, which is he's spoken a lot about.
He's been talking about this model of economic federalism, giving more power to state governments and so on and so forth. Do you really believe this, PM-CM team, do you believe that this is going to be borne out in reality?
Well, I think, India has no choice, because, that's really sort of India's social fabric, which is one, of 28 different states. The voting patterns, the consumption patterns can change so dramatically from one state to another. So that's the only way to really build the Indian model, because we are such a heterogeneous country with such diversity. So I think that what he's speaking about is in sync with India's social fabric, and if he doesn't do that, I think that he's going to hit resistances pretty quickly. So I do think that he's thought about this, because he's been a state chief minister.
Yeah.
He understands
what it takes.
Problems,
yeah.
Exactly. And this is the first time in India that a state chief minister has risen to national prominence, because in the past you had just central leaders or some chief ministers like Dev Gowda.
And because the mandate he enjoys, he can afford to be generous, perhaps.
Yeah, because exactly. And if you look at the history of other emerging markets, it's really the first 12 to 18 months where the maximum action takes place.
So in terms of bold, decisive action and controversial, bold, decisive action, you talked about labor reforms, and you believe that maybe we could see something on labor reforms.
But giving more power to the states to do something about it.
Sure, in the first 12 months. What else?
Well, I think that, something to do with subsidies as well, in terms of the fact that...
Do you see him pulling back on the welfare schemes? I mean, things like food security, NREGS, these are acts of parliament, so there's only so much leeway or headroom that he has to tinker with them. But what do you really see him doing as far as the welfare schemes are concerned?
I'm not quite sure, because, in the election campaign, nobody everybody speaks about what they're going to do with welfare schemes. So in terms of, I think that the one thing is that so far, like it's true that, what he's really done very effectively is sold India a dream, and a lot of people have bought into that dream, but the specifics are still short. And there's not a criticism. This is how elections are fought, by selling dreams. And the specifics are still pretty short in terms of what we know. But I think that what's very clear is this, that we know the roadmap that many East Asian countries followed to become success stories, where they were able to grow 8 to 9% regardless of what was happening in the global environment. And that roadmap includes heavy urbanization, whereas
he's talked about 100 cities and so on and so forth,
right.
Modernizing the railways. What do you think will be the priorities?
Well, I think, exactly those things, because if you look at India compared to China, here's one very interesting stat. That in the last 30 years or so, India has barely created any new cities. And by new, I mean cities which have gone from with a population of, let's say, quadruple to 1 million or so. China, over the same period, has created 30 new such cities. So the fact is that we need more new urban agglomerations and not just sort of existing cities building more slums, etc.
So what would foreign investors look at, before they start pumping in money into India? What are foreign investors specifically going to be looking at? As far as tax and all of that is concerned, I'm sure he will signal the intent to give a clearer pitch. But what will specifically foreign investors be looking at?
Well, I think foreign investors across the spectrum, in terms of, I think that much greater stability on the tax front. They'll be looking for some sort of control of the subsidies. It's already happening. The outgoing government had really put into place many of these things. So I think much greater transparency, assurances that the sort of bureaucracy won't sort of impose taxes out of this thing whim. So much greater stability in the operating regime is something that they'll be looking for. And the second thing I think is that and this is the most important thing, we focus a lot on foreign investment. But if you look at the big success stories, it is really the domestic investors who sort of create the success stories. In fact, one of my favorite rules of the road when I'm looking at a country is that always follow what the locals are doing. The locals are smarter. So when the locals
locals have been holding back.
Exactly. So I mean, a real positive confirmation sign to me about what's going on is when locals start to bring money back into the country. And many NRIs have done that in the last 6 months or so as well. Of course, because they've been incentivized to do so, but given the corrective measures and some of the schemes offered, they've been doing so. So across countries, always look for what the locals are doing, because the foreigners tend to lag, typically. Now, in this case, the foreigners have been very excited about the stock market, but really for a broader Indian economic recovery to take place, look for the domestic investors to be investing more in India, rather than the same companies, etc., going and diversifying abroad. Because that, as you remember, was one of the negative signs that we had spoken about in terms of what was going wrong with the India story 3 to 4 years ago.
How soon do you actually see the revival taking place, and what do you believe will be the magnitude of the revival from the current levels and where we are today? People are anticipating that second half we are actually going to see the economy pick up. But what's your own assessment?
No, I think that's a fair assessment, but in terms of the trajectory, we have to be very mindful of something, which is that our economy is very globally linked. It is not. It doesn't function like in isolation. In fact, if you go back to 1980, over any 3 to 5 year period, India's economic growth rate has consistently been about 1 to 1.5 percentage points higher than the emerging market average, but it's very linked. And our stock market is the most highly correlated stock market to global emerging markets over the last 3, 5, 10, 15 years. So global linkages matter heavily. Now, assuming that we are still in a low growth world or so, I think it'll be very difficult for India to sort of get back to a 7% type trajectory even anytime quickly. So we can get back from, the 4.5, 5, we can step up to 5.5, 6, possibly get to 6, and above that really depends a lot on what sort of reforms are carried out.
And what happens to global growth.
That's right. But I think that to get to 8 to 9% is not my sort of reference point, because that happened under very exceptional circumstances last decade, and that's not coming back anytime soon, I think.
So 8 to 9% not coming back even in the next 3 to 4 years, you believe?
No, I think that the probability is small, unless something very dramatic and revolutionary happens out here, like in India. These election results have surprised us. Maybe he'll surprise us now with doing something really dramatic. But I think that, as you yourself point out, like in your questions, that the chances of getting something dramatic like labor reforms or getting sweeping changes to the welfare schemes in a sort of polity like India, no matter what the mandate, is still very difficult to implement. Once you sort of put something in motion out there, like a welfare scheme, it's hard to put the genie back in the bottle, right? So it's very difficult to reverse these kind of
So we need to contend with 6.5%, under 7% kind of growth rates over the next couple of years, you believe?
I think so, unless the global growth really sort of picks up a lot, because then you could sort of get that added tailwind in your favor.
And what's your assumption on that?
No, I mean, I don't think so. In fact, if anything, that the concerns which have been creeping into the global marketplace in the last few weeks is the fact that global growth is once again beginning to disappoint. That the US has sort of done its bit but not achieving escape velocity. In Europe, the growth has surprised on the upside a bit but now is tailing off. And China remains a very big risk in terms of the fact that Chinese economic growth rate in the first quarter had slowed down to below 6% on a sort of sequential basis. So these are sort of major slowdown factors across the world. So I don't think that global growth looks that exciting over the next 12 to 18 months.
Richard, before I let you go, we're completely out of time. Given where we are today as far as the political mandate is concerned, given where we are from an economic point of view, from a global growth point of view, anytime soon that we could see India make its way back into the breakout nation club?
Well, I think that, like the best thing which has happened is the fact that our expectations at least have got realigned. I mean, when I wrote the book which you're referring to, about, like 2-3 years ago, at that point in time, when I suggested it'll be very difficult for us to grow at 8 to 9%, I think, there was so many people who thought I was being too pessimistic on India. Last year,
they'll now say you're being too conservative.
No, but last year, they were, when sort of, we were in the midst of the crisis, then people were saying you're being too optimistic on India by even assuming that India can sort of, do anything. So these emotional swings in India, like I'm very used to it. I've seen this in India. There's no doubt that something regenerative is taking place in India just now. This is a circle of life that most countries go through after a period of sort of crisis that gives birth to reform because some new leader comes through. I've seen that across emerging markets. So there's no doubt that India's chances look as bright as they have looked in recent years. But just having seen India for many years, it's very difficult for me to sort of imagine these wild swings sort of sustaining, because I think that emotion gets the better of us. So, as far as India is concerned, I put my money where my mouth is. We are currently overweight India. And that's something which we are sort of sticking to. But
which of the sectors that you believe are going to be the ones that you see outperforming?
Well, I think it'll be like a smattering of distinct sectors in terms of, if the India story does well. I think that in terms of, it's very critical for manufacturing to get going in India. Clearly, the financial sector is something which will keep doing well.
Is that where you're putting your money?
Yeah, that's right. In terms of, our sort of sector allocations in India are along those lines. So I think that the whole sort of thing is, that the India story, if it really sort of takes off, you'll find many opportunities as far as India is concerned. But always be a bit skeptical when people tell you, when I get to hear these phrases that we are on the cusp of the mother of all bull markets, etc., I get a bit concerned because markets...
You don't believe we're on the cusp of the mother of all bull markets?
No, because I think that markets climb a wall of worry. So what I really like to see is some healthy skepticism always in markets, because that's when you know that you can sort of go past that. Having said that, if you look at all the past templates, the first 12 to 18 months of a new government, especially when a country has gone through some sort of a problem, typically tends to be very good from both a market standpoint. But the assumption here is that Modi will spend his political capital to carry out economic reforms.
So will you up your allocation in India in the 12 to 18-month period?
Yeah, as I said, luckily we were already overweight. But when you get sort of wild swings like this, that's the time never to act. Because you basically sort of never act on the back of this, because last August when I was here, the advice of most people was exactly the opposite, that that India was done and India was going to go sort of hat in hand to the IMF. So I think that these emotional swings will continue. My sort of feeling is the fact that India, in terms of the fact that the growth trajectory will improve, but I still want some healthy skepticism to remain, because that means that you can climb a wall of worry in India.
RUCHIR Sharma, thank you very much for tempering expectations and for being the voice of reason here on the show. Appreciate you joining us here on CNBC TV 18 on India 2020. We're completely out of time. Thanks very much for watching.